Thursday, February 23, market analysis, Stan Ehrlich. Good morning. You know I start out with the stock market indexes, specifically the S&P 500 SPDR, SPY. Daily charts on the right, the 1-minute chart is on the left for detail. We have an interesting combination today. So you'll always go back to the longer-term charts for your longer-term signals. And because I think there's still a good chance, and you notice I'm changing my phraseology a little bit. Okay, and that didn't change. Just a second. Yes. Oh, for Christ's sake. One moment. There we go. There's still a good chance. What am I doing wrong here? Well, that is strange. Oh, okay. Sorry. Okay. Apologize for that mess. Now, I still think there's a good chance we have a large head and shoulder bottom formation starting in June. I've talked about this for months every single day. The bottom of which, of course, is October 13th. The October lows, it's a seasonal tendency. It's great. It happens almost every year. This year it was spectacular. The bottom of the bear market for the whole year of 2022 and the beginning so far of the bull market, and I think the bull market of 2023. But we are at a very, very important juncture here. Again, we're back at the moment below the neckline, right in here on the far right, below that major green line. Not much, but a little bit, like a point or so. Net lower on the day by 1.23 at the moment. If we can get back to higher on the day and close above yesterday's close, we will have a bullish engulfing. Very unfortunately, so far today, we haven't actually touched an RSI level of 25 or less. If we do that, then we will be doing exactly what the DIA could be doing in a few minutes. I'll show you that. Having an ER official green buy signal, like, I hope, as profoundly as October 13th. That's how important this is. So closing lower today is not terrible. It depends upon how much. Where we are right now is below the neckline, not good. We made a new low for the move down, not good. So a variety of things that are starting to ruin at the moment this giant head and shoulder bottom, again, that I've been talking about and has been working fine until last couple of days. Problems. But the fact that we're very, very close to oversold, I like a lot. Markets turn up when they're oversold, usually. And look what happened when we got a little bit overbought for a couple of days. It ended up being the top of the market on February 2nd and February 3rd this year. And now we're all the way down here. So why not reverse everything? If you get a little bit oversold and we're almost quite there, not quite, then it should turn up. We'll see. I know what to look for, but if I get it, I'll scream bloody murder. And if I don't, well, we don't. So we need a rally. The 1-minute chart on the left shows that a little while ago, one may have started. At the moment, we've got a little retracement. Again, super fine-tuned, minute by minute technical analysis. So getting above 398 would be good. Not good enough, but good. You want to get above the previous close of yesterday and stay there on the close. What would be fantastic is a lot more strength after that before the close today, of course. And then tomorrow's Friday, and you might have a lot more follow through upwards. That would be great. Again, this is not happening yet. So don't put your buying shoes on. Well, you can put your shoes on, but, you know, we're not ready to do anything about it yet. DIA is officially oversold. With our ER signals, we turn the daily price action yellow. It's a caution that the market is about to turn. And since it's oversold, we mean up. It hasn't done it yet. If it can rally, and we're not down very much, 1.75 on the DIA, the Dow Jones ETF. If we can turn off, and we're bouncing off a little support area on top of that, we may be able to close higher in the day, and then the price action will turn green, an official new buy signal, period. I'll be very, very optimistic if we can get that kind of strength by the end of the day. And now let's look at the QQQ. We also have an outside trading range day. You really can't tell very easily just by looking at the daily, but you'll notice that the low today so far has been 292.55, and guess what? Yesterday's low was 292.56. We did get one tick below yesterday's low, and that makes the difference. Right now, it is an outside down day because we're down from the previous close. The outside is never going to change, but until the close, we could turn up, we could turn down more, current quotes going up and down. So again, a little rally will put us into a bullish engulfing, but unfortunately, the QQQ did not get very close to oversold, and as a result, it won't turn green. But I'm going to love a key reversal because it's happening at the appropriate places depending upon which symbol that you look at. So I kind of think it's a make it or break it day today. And break it means we're going to go down some more. And if it turns around to close strong enough, that could be the beginning of a rally for a new high for the trend and a perpetuation of the long-term bull market for the balance of the whole damn year. Excuse my French, Italian, German, and English. So I'm looking for a rally, and we'll see if we get one or not. Futures have some brand new signals today, but I'm going to talk about crude oil first. It's up a little bit. We came very close to oversold. So I'm not surprised it's bouncing a little. But the key here is making new lows for the last couple of months. If that happens, it's going to fall apart pretty quickly, pretty fast. Probably. No guarantees in this business. The only thing you can say is the market's going to do what you don't expect it to do when you don't expect it. That's kind of a double dumb thing. Now, bear trend, it's slowed down a little lately, but it's going to speed up again if we start making new lows, and I believe that's going to be the case. Next chart is now heating oil. Same comments. I've drawn a couple of support lines, the green dashed lines, that are not very far away. This could be a new low close for the move down, and almost so far today, a new low, not quite, but close. So in a matter of minutes, there's going to be sell stops below the low of 3 days ago, and that's a hair above the low made a couple of weeks ago, and that's a new low for 2 months, and that's close. And if you get below that low, you see this is a domino effect. They're all close together, and you knock off one, you're going to start dropping faster and faster. It'll be considered a downside breakout. Now, the next level is 2.32 or so, and that, of course, is a new low since March. Yep. And that'll be 10 months. Bearish as heck. Next chart. We had a new sell signal just 2 days ago on wheat, and it's doing just fine. We are about unchanged. Yesterday was a pretty big down day. And again, the day before yesterday on Tuesday, we had that bearish engulfing red sell signal, ER sell signal. So far, so good. I warn you, we are getting a little close to oversold. So if it moves down some more, which I think it will, and there's support a little bit below, it might bounce slightly. There's also a chance it'll crash through the support and get even more oversold for a day or two and then have a bounce. Let's keep an eye on this. But the sell signal is working just great. That's the idea. The buy signal yesterday in natural gas is working great, including the fact that it came back to hit our green dots, which is the ER3 entry. Every time you see a green or red bar, ER1 has had its entry and is either in the trade, either lost some money or made some money and is out of the trade already, or maybe still is in the trade. We have two versions of ER1 and two versions of ER3. ER1 gets in the day the signal occurs and scalps it, or keeps it overnight if things are going well, meaning you're not stopped out. ER3 gets in on a retracement like this little dip we had this morning back to our trigger price, and that was hit right near the low of the day, and we're profitable on ER3. We should be very well break even on the ER1, and so far so good. No problems. And I can promise you the stops is starting to move up already on our 1-minute charts, which I do not show you. Next, maybe sometime I'll start showing you the 1-minute charts. We picked the top of the market in gold only at the beginning of this month, February 2nd. It has come down very substantially since then. I know I screamed bloody murder at that point on that day. There's no ifs, ands, or buts about that. When I see green or red, I get turned on. It's my signal. I love it. It's been over a decade in the making, and I've used what I've learned over 52 years in this business as a technician, my little tricks to create these red and green vertical bars or candlestick bars. It doesn't matter which. So the last signal was a buy. It failed, but one of these sell signals was the very top of the market. That's exactly why I developed the trading system. And we have a new low for the trend so far. So in general, this is just working fine. Next, corn does not want to break that major bear trend line. It came very close at the high of yesterday and the day before, and today, boom, hit the dust. Didn't want to break through the resistance level, and that's a major bear trend line with several points on the line. Usually there's only 3 or 4. You need 2 to start. So that's not what I thought was going to happen. I thought we were going to push through the line and start a bull move. So now I got to wait. We are getting close to oversold, but not quite. There is support below the market, and it's not going to damage anything about the long-term bullish potentials. We'll see here. That was corn. Bond futures. Ladies and gentlemen, we have a bullish ER buy signal today in the 30-year long bound. Do you know what this means? I hope so. If this is correct, and we are correct many times, this is the beginning of a rally in the bond futures. When bond futures go up, interest rates go down. Not day to day necessarily, but on the average, the expectation of, etc. That's good usually for the stock market. Stock market usually likes that. And by the way, we're now down a little less than a point on the spider momentarily. 92 it looks like. All right. I want this to turn green and that to turn green and that to turn green. These first 3, spider, DIA, and QQQ at the top, the quotes. The new bullish engulfing in bonds is very encouraging. I really like to see that today. It's perfect timing. Now remember, we may be able to come back down into approximately the middle of today's range during the next few days. That's not going to bother me. And also remember, you've got to stay higher than the closing price of yesterday in order to maintain the green color and a bullish engulfing ER buy signal. Also, we turn the RSI. Of course, this is a custom RSI. I learned relative strength from Wells Wilder himself. Very nice guy, and his wife, I think, Rosemary. At one of the 150 conferences I've done so in my life. I think it was Vegas, as a matter of fact. I slightly remember it. Regardless, we also turn RSI green when we turn the price action green. And there you can see both. I love it. I like what I'm looking at. I just hope that it works. You've got to get into the trades early to keep the losses small when you're wrong, and to allow your profits to be bigger when you're right. Because you get in at the top or the bottom of the big swing. You don't know it necessarily. You expect it, you hope for it, you like it, etc. when you do it, but you got to wait some time and some price action in order to prove that you actually did it. You can't turn the clock back. Next chart. This is 10-year notes. We are oversold in 10-year notes for several days now. Let me look. 1, 2, 3, 4, 5, 6, 7 days, approximately a week and a half. That sets it up for a potential green buy signal, which you already got this morning in the bonds. We just looked at it. This is the 10-year notes. They are in a broad general area of support, nothing particular exact, but I'm optimistic here. Oversold conditions in a very general sense may turn the market up or down. If they are accompanied by other technical tools that say the market's turning up, then you've got the odds increasing in your favor, and that's exactly what I've done with the ER buy signals, combined candlestick charting with an oscillator, both of which are historically used commonly, but not necessarily together. Next chart. E-mini is right at the same levels as the SPY. We've got to have a reversal here, and I just noticed it turned yellow. We have a oversold official condition on the E-mini, so all it has to do is close higher than yesterday's close. We are currently down on the day a very modest 25.15 or so, not that big a deal, and it wouldn't take much strength to get me a green bullish ER buy signal today. Hasn't happened yet. Now, it won't be as big and profound as we had on October 13th down here at the bottom, but hey, that's retrospect, 2020 hindsight. Put yourself in the position of looking at this market during the day on October 13th, and all the rest of it hasn't happened yet. And you see, all of a sudden, it turns green, and it just kept going up and up and up and up before the bell rang. I'm not saying that's going to happen today. I'm hoping, but, you know, don't trade on hopium. Never a good idea. Again, never trade on hopium. An old one. You can never make the market do what you want it to do. You always have to move with it. That's another one. I think that's my last chart of consequence. No, I got another one. Silver, not too great. Coming down today in the second day. I got a buy signal and it worked for one day so far. Yesterday it slipped a little, today it's slipping more. We're not stopped out yet. That's the yellow dot. We always have a smart trailing stop, STS, the moment we get into a long or short position, period. One of the biggest mistakes traders, investors, and so on make is they never consider, well, where am I going to get out if I'm wrong? And how much am I going to lose, you know, where I'm going to get out? So they never have planned money management. Again, neophytes do this all the time. One of the biggest mistakes. So I will get out if the yellow dot is hit. Meanwhile, you might consider getting in here. Why? If I'm right, you're going to have a bigger profit, and if I'm wrong, you're going to have a smaller loss. Next chart. Cotton. Okay, one of my subscribers asked me to add this. We did get oversold. We are starting to move up a little bit, so I'm expecting a little strength short term, but there's no breakouts. We're in a sideways trading range for several months now, since November, and we got to wait for a breakout in order to get something going here, in my opinion. I think that's going to be it. Live cattle is a little bit overbought, so a little bit of a correction. I'm going to leave you with that for today. Tomorrow, I'll cover some forex and some sector charts. By the way, the sector charts have several of them that are oversold. And like you would expect with the stock market not being down very much, and maybe we're going to get a rally here, they're going to also give buy signals and turn green. But I'll show you tomorrow. None of them have done it yet today. You have a great trading day. Thank you very much, Stan Ehrlich.